Hello everyone, this is Daniel Martins from Apple Maven. So today is Wednesday, July 29th. It's the day before Apple's earnings day. So I wanted to take this opportunity to take a look at where expectations are and also talk a little bit about the different puts and takes, what I expect to see tomorrow, July 30th, after the closing bell, and what are some of the things that are likely to move not only the stock, but also Apple's financial results. So about 2 to 3 weeks ago, I published an article in which I looked at what analysts were saying regarding revenues and EPS for fiscal third quarter. So back then, the consensus estimate was for EPS of $2 per share, and then also a revenue decline of about 4.2% year over year. Now, today, I just did a refresh and those estimates have come up a little bit. So EPS is currently projected to land at 203. So it's an increase of about 1 to 2% in earnings. And the revenue decline that was 4.2% is now projected to be 3.6%. Now, those changes are not that relevant, that significant in terms of the magnitude, but it does kind of point in the direction of optimism. So it looks like street analysts are expecting a little bit more of Apple in the fiscal third quarter currently than they did about 2 to 3 weeks ago. Now, if you ask me, I think this is going to be one of the toughest quarters to basically make projections because of COVID-19. So of course, Apple is not a pure hardware company, it's not a pure software company, it's not a pure services company, it's a combination of all of them. So COVID-19 is going to impact the different parts of Apple's business differently. And that is one of the reasons why, for example, Apple chose not to provide guidance for fiscal third quarter about 3 months ago. For that reason, analysts don't have that benchmark, so their estimates are a little bit all over the place. So for that reason, it's really speculative to try and figure out if Apple's numbers are going to be good or not this quarter. Now, what I think is a little bit easier to do is to look at the different pieces of the business to see what is likely to come in strong versus weak in the quarter. So the iPhone is always a topic of conversation. So the iPhone in fiscal second quarter, which is January through March 2020, sales were down 7% year over year. So it was not a very good quarter for the iPhone. Now, of course, you already had a little bit of the impact of COVID-19 during that period, especially in Asia. So Greater China was impacted by it more than the Western Hemisphere. And what we're going to see now in the fiscal third quarter is a reversal of that. So basically, you're going to see the Western economy, especially in the United States, because we haven't been very good at getting rid of the pandemic or dealing with it in a good way. So we're likely going to see weakness in product sales in the Western Hemisphere in fiscal third quarter. So I think that's going to be a problem for the iPhone. Now, on the other hand, what is probably going to be good, a couple of things. One of them, of course, is what I just mentioned, China. So China used to be a great market for Apple. It used to account for about 1/4, about 25% of Apple's revenues in 2015. And since then, the country hasn't been doing that well. This time, it's Apple's or China's turn to shine, because of course they're in the rebound from the COVID-19 crisis. And you should see better revenues coming out of Greater China. And then the other piece is the iPhone SE. So the SE was launched in April. So Apple had the whole fiscal third quarter of sales. And in the reports, the preliminary reports that we're seeing from third-party researchers is that the SE actually did very well coming out of the gate. So the SE should lift revenues, China should lift revenues, but overall, COVID-19 should be a negative for iPhone sales. So in the aggregate, once again, it's a little hard to have a high conviction projection on what the numbers are going to be, but I expect the iPhone to not do as poorly as it did in fiscal second quarter. At the same time, I do not expect it to be one of the strongest segments for Apple. Now we can move on. We'll move on to wearables. Now, wearables is actually where the growth is for Apple. So if you think about just the long-term product cycle, the iPad and the iPhone, they're basically in the mature stage of their life cycles. However, smartwatches and wireless headsets and things like that, they're very much in the initial phases. So wearables, once again, should be a relatively strong segment. Last quarter, fiscal second quarter, wearable sales were up 23%, which was really impressive. However, I think there's going to be a little bit of headwind in regards to demand for wearable devices, because in the second calendar quarter, most people were still sheltering in place. They were not really leaving the house as often, so the need for a smartwatch or for a headphone was probably reduced. So net, I expect wearables to do fine, but just probably not as well as they did in the January through March period. And then of course there's service. Same forces. So people sheltering in place, staying in front of their computers, in front of their mobile devices, that probably bodes well for services. We're talking about the App Store, Apple Music, Apple TV Plus, and so forth. So for that reason, I expect services to do well in fiscal third quarter. And what supports my optimism is also the fact that the banks reported earnings last week. And the idea that they communicated when it comes to consumer spending is that, generally speaking, consumer spending is not recovering very fast. It is recovering, but kind of slowly. Now, if you look under the hood, what you see is that certain categories are doing very poorly. So we're talking about travel and leisure, for example, airlines, things like that, not recovering fast at all. However, things like purchase of digital products, purchase of subscriptions, e-commerce, all of those things, basically the stay-at-home economy is doing really well. So it recovered very fast and it never really came back down. So for that reason, I think Apple Services segment will do fine in fiscal third quarter. And I'm willing to bet that it's actually going to be the best performing segment for Apple. The last topic, in my view, is margins. So margins is always going to be an important topic of conversation. There are going to be there are usually lots of puts and takes in terms of what impacts margins, and what you're probably going to see this time is a combination of pros and cons. So on the con side, on the negative side, I think that within the iPhone category, for example, which is a huge category, the heavier mix of the iPhone SE, which is lower price, probably lower margin, that's probably going to be a headwind to gross margins. So it's probably going to put pressure on profitability. That's at least what I expect to see. However, the heavier mix of services compared to products, that could be a positive for margins, because a lot of Apple services, they do carry better margins than their products. And we'll have to see what the net impact, so which one is going to be more relevant for margins in the end. If you move a little bit farther down the income statement and you look at operating margin, then I believe we're going to see a little bit of upside, just because, actually two reasons. One of them is Apple stores were largely closed in the second calendar quarter, especially in the Western hemisphere, especially in the United States. Here in the US, you still have some stores that are either closed or they're operating limited hours. So of course, stores being closed is not a good thing, but there's a silver lining. So the silver lining is that you don't have the overhead of having to maintain the retail channel up and running. And then of course, within operating expenses, I am sure that Apple has some discretion or some control over discretionary spending. And given the challenges, I'm sure that Apple will be conservative enough to try and limit certain expenses to kind of try to ramp up the bottom line a little bit. So for those reasons, I think that operating margins will see a little bit of upside from operating expense management. And that's basically what I would expect to see this Thursday. Now, as far as the stock is concerned, the Apple shares, they kind of de-risked a little bit in the past few days. Not a whole lot though. If you still look at the past 3 months or the past 12 months, well, take the past 12 months, for example, Apple shares are still up 80%, which is kind of rare. It has happened in the past with Apple, but only around some very important events. So for example, the launch of the iPhone, the very first iPhone, or the launch of the iPad, or the recovery off of the Great Recession of 2008, 2009. Those were events that kind of led to Apple shares being up this strongly. And this time, I don't know, maybe it's the 5G super cycle that's doing it. Maybe it is investors kind of realizing that Apple is becoming more of a service and recurring revenue kind of company. So those could be reasons why the stock is so strong going into earnings. And that's good, but the downside is that I believe that Apple will have to knock it out of the park for the stock to move higher from current levels. Valuations are rich already enough as is, so you need to see like very strong numbers coming out of fiscal third quarter for shares to keep climbing in the short term. In the long term, I'm not very concerned. Long term, I continue to be an Apple bull. I think the fundamentals are great. The balance sheet is great, it's very solid. And you have growth in wearables that you didn't really have a couple of years ago. And then of course you have services, that have your mix of services revenues being a positive for the long term. So the question really is, if you're an Apple investor, do you sell ahead of earnings? If you're not an Apple investor, do you wait for earnings before you buy? And of course, that's going to be somewhat of a personal kind of take or perspective. But if I had to offer my opinion, I would say that I'm very positive on Apple for the long term, but I am a little cautious about what might happen to the stock in the short term. So this is it. These are my opinions on the matter. I do want to remind you that on Thursday, July 30th, so tomorrow, I will be live vlogging the Apple's results. So the press release will come out after the close, and I'll take a look at the numbers. I'll share my thoughts real time. And as the earnings call begins, I'll be listening in and again sharing my thoughts in real time with the community. So if you want to check that out, go to thestreet.com/Apple, and then you'll see my live coverage on the earnings result this Thursday. So I hope to see you there and hope that everything is well with you. Take care.